Good morning, one and all. Myself, Astor, and today I'll be presenting on the topic alternative investments. First, let's get to know what is meant by alternative investment. An alternative investment is a financial asset that does not fall into one of the conventional investment categories. Conventional categories include stocks, bonds, and cash. Alternative investments can include private equity or venture capital, hedge funds, managed features, art and antiques, commodities, and derivatives contracts. The real estate is also often classified as an alternative investment. An alternative investment is a financial asset that does not fall into a conventional equity, income, cash categories. The private equity or venture capital, hedge funds, real property, commodities, and tangible assets are all examples of alternative investments. Most alternative investments have fewer regulations from the US Securities and Exchange Commission and tend to somewhat illiquid. Illiquid is basically the items which cannot be turned or converted into cash. Liquid is an asset which can be easily converted into cash, or an asset which can earn income or provides the income to the business. While traditionally aimed at institutional or accredited investors, alternative investments have become feasible to retail investors via alternative funds. The major types of alternative investment. So there are many types of alternative investment, but the major and the broad types are: first, commodities. Commodities are physical materials and natural resources. Example: foodstuffs, precious and industrial metals, golds, and natural gases. Second one, collectibles. Tangible items whose value can increase over time. Example: art and antiques, jewelry, coins and stamps, vintage wine, books, etc. Real estate. Real estates are the physical property or raw land. Private equity. Private equity are investments that aren't publicly traded. Limited partners, private company stock, or debt hedge funds are some of the examples of private equity. Derivatives. A derivative is a contract between two parties that's built on speculation about changing values of an underlying asset. Example: options, future contracts, swaps, etc. The features of alternative investments. The first feature is its low correlation with the traditional investments. This may be extremely beneficial to potential investors because the low correlation provides opportunity for portfolio diversification. Second one, hard to determine the underlying value. And alternative investments are often inherently complicated when it comes to valuation. The valuation of the alternative investments may require specific knowledge, and some innotics investments such as fine art may show unpredictable demand patterns. In addition, they may be unique in nature, which also complicates the valuation. Third one, relative low liquidity. Generally, alternative investments impose relative low liquidity. The example for low liquidity is a real estate. It's quite difficult to convert the real estate or to earn or to change it to cash. The time needed to convert and real estate into cash, that is to sell and real estate, is much difficult as compared to liquid assets like stocks, bonds, etc. Especially compared to traditional investments, the low liquidity can be explained by the absence of centralized markets and low demand of some of the assets related to traditional investments. In addition, some of the investments come with the restrictions regarding existing from the investment. The fourth and the last feature is High purchasing cost. Alternative investments are frequently associated with high purchasing cost. Some alternative investments such as hedge family requires a minimum investment amount as well as a fee. Thank you one and all. I hope this was an informative presentation.